Hi, it's Larry Gaines from Options on the Open. Wow, what a crazy week this week, huh? Market was up and down, lots of news, lots of headline risk in the market. And when you have markets like this, you really need a trading system and rules to trade with in order to navigate the very choppy waters that we're currently in. So I had received a lot of emails this week asking questions about how to use top-down market technical analysis. And this is a technique or analysis that I've used for years and years and years for my trading, going back probably 20 years or so when I ran a large proprietary trading desk for a large oil trading company for over 10 years. And we would use this type of analysis technique for fundamental and technicals. And I wanted to go through this, kind of briefly highlight it to give you a little bit more information on it and show you how it can be used. But before I get started, if you have not received my free ebook, please go to my website, optionsontheopen.com, and you'll see this download your free ebook, 15 Top Trading Strategies. Just put your name, email address, and it'll be sent right to you on the spot. So got quite a bit to cover here, so let's get started. Now, top-down market technical analysis allows traders or investors a methodology to analyze the markets from a macro big picture all the way down to the short term or intraday. Now this approach begins at the top. The first step is to determine the macro big picture trend, and at Options on the Open this is easy because what we do, we use the power cycle trading model, which is a cycle model that I developed for all of our trading. It's highly accurate at signaling tops and bottoms of market cycles. So once a new cycle trend is identified, then as an investor or a trader, you can plan on how to allocate your capital. So you can do this from being more aggressive from the long side if it's in a macro uptrend, or more defensive to the downside if you're in a macro downtrend. So this is really helps you plan your trading, and it's something that every trader or investor needs in order to be successful. Now, in this analysis, I will use 5 different time frames. I will use the macro market trend cycle, which I measure by a monthly time frame. I will use a long-term market trend, which is measured by weekly. Medium-term market trend is measured by daily. Intermediate market trend is measured by hourly time frames, and then short term, what we use for our day trading, is measured by minutes and tick intervals. Now, to start this analysis, I mentioned that you start from the top down. So the top time frame that I use will be a macro time frame, and to do this I measure macro by monthly chart time frames. So each bar here represents one whole month of data, the high, the low, open and close of that month. So each bar represents a whole month of data. So then inputting the cycle model using a monthly time frame, we can come up with the current macro trend picture. So these arrows, now I want to clarify this and make sure that you understand, these arrows I put in to mark where the cycle model system identified certain entries and exits and neutral positions for the cycle model. These are not automated, so I don't want you to be confused by that. But if you go back currently right now, this past week the cycle model went to a macro downtrend, which is identified by this red arrow. Prior to that, we were in an uptrend marked and signaling and indicated by that green arrow, and that came on the end of December 2011, and then the cycle model went neutral on the end of February 2012, and it's just gone into a macro downtrend this week. So remember also that I've done a lot of work and analysis, which are in some other videos, that the cycles tend not to bottom until the latter part of summer months. So we're currently in June going into July, and a lot of times the markets, if you go into past historical data, you'll see that the markets tend not to bottom in the early part of the summer months, but will tend to bottom later, like in August, September, in that time frame. So just looking back here, you can see cycle high, cycle low, neutral, cycle entry. So this system nailed the cycle shift back in December, into December 07, and then we had this huge move down, and the cycle model that I developed got back into the market in April of 09. Now the next time frame is the long-term time frame, and it's measured by using a weekly time data or chart. So each bar here represents one whole week of data, and so based on inputting the cycle model using a weekly data, the long-term trend currently is neutral, indicated by this yellow arrow. It was in a downtrend, and that started April 6, 2012, and lasted until it went neutral last week, June 8th, a week or 2 weeks ago, June 8th, and so it's currently still neutral, and that's the current situation there. Now what I also will do when I'm using these particular time frames, I'll overlay Fibonacci retracement levels so I can see directionally where the market potentially is headed and see where major resistance and support is to use for trading, either getting out of positions or re-entering positions. So if you put a Fibonacci retracement level in here, starting from this low that came in October 7th, 2011, to the current high, which took place back in April 6, 2012, if you chart the Fibonacci level from this low to this high, these are the levels that will give you various support zones and resistance zones. So you can see here that the market topped out here on April 6th. The cycle model gave a cycle down entry signal on April 6th, and then it chopped and went straight down. Now you can see the 236 retracement, we just came up to it. It penetrated but failed, and now we're sitting on that. It did go down earlier, went through the 382, and the next level of support will be the 50% retracement and then the 618. So bear that in mind. A lot of times on long-term trends, if it's a really severe downtrend, they're going to usually stop at the 618. So being that it's early, still midsummer type of basis, we could easily get back down to the 382. And Goldman Sachs this past week put out a sell recommendation on the S&P, and their target was 1285, so that comes in pretty much right at the 382 retracement. So this is a good target area, and we're currently trading up here at 1338 in that level, in that area right now. Now for the medium term time frame, I will use a daily chart, daily data, and I'll put the same model and using just the daily input data. And so you can see here the cycle trend is currently neutral. It was in an uptrend, and that happened on June 6th. We had a nice rally going into the Fed meeting, and then it topped out and went neutral right there on June 20th. So prior to that, you can see a cycle high, neutral, entry, cycle neutral, and then cycle high. Now again, I put in Fibonacci retracement levels here from that high on April the 2nd down to the low when we came down here on June the 4th, and you can get these Fibonacci levels in here. You can see that the market stopped when it got right back to the 618 retracement. So it's a very strong area. 618 is usually a big area of resistance or support for Fibonacci. So now we came right back down to the 382, and you can see how it just stopped, nailed it right there, held at the 382 here last Thursday and on yesterday's market on Friday. Now it breaks through there, then it's going to cycle back down to the 236, and we could get a retest back here at 1266, the low back in June. And keep in mind that Goldman Sachs had a target of 1285. So 1285 is right down here. So I wanted to go through this to show you the use of our cycle model in combination with Fibonacci retracement levels to help you navigate these markets, which are very treacherous and choppy and volatile. So I hope you learned something here, and I hope you will join us at Options on the Open, and good luck trading.